Here we have the 4-hour price chart for Meta Platforms Incorporated, stock ticker META. So if we move a bit into this price chart, we can see some very important price levels that should be watched in the coming week because we do have some very critical event risks that are likely to affect this stock near term. Many of these event risks are not going to directly impact the stock per se. However, there will be some ripple effects that we do see next week that will almost certainly influence share prices for this stock and the current stock rally that we've seen to the positive direction. So, just for a bit of a recap here, anybody that hasn't been following the stock closely, we can see that share prices themselves have seen a fairly significant price movement to the top side. Ultimately, we did see price lows coming in at roughly 442.65, and then this resulted in price highs coming in at 544.23. Of course, this is very important. This was a very important price movement and breakout to the top side, given the fact that this does overcome the prior all-time high for the stock, which came in at 542.55. Of course, this was posted during the July 8 trading session, which was a few days before, what I'm calling D-Day for tech stocks this year, which was the July 11 trading period. This is essentially when many stocks really started to see massive declines and move lower. And with Meta Platforms, this was a situation where the stock had just posted all-time highs. So normally you would think that this would be accompanied by a strong period of optimism where share prices would be able to remain elevated. However, that was not the case for Meta Platforms, and this does show that this stock is particularly vulnerable to downside trading risks and somewhat volatile price action for trade setups that are not managed properly. So we will be looking at some important price levels in this video because these levels should be used as key strategy points for anyone that's looking to actually profit from these trades in this stock going forward. So as we can see here, this most recent trend wave higher did result in share price movements that were more than $100 in share prices higher. So as we can see here, currently what we're dealing with is a major rally that has sent indicator readings into overbought territory as well. We can sort of zoom in here a bit, and we can see that this ultimate price movement higher did actually show indicator readings that were above the 70 mark, which does suggest that share prices were in overbought territory. In addition to that, what you have here is a fairly clear bearish divergence in share prices, which does show that the stock was at risk to some further declines. So we can sort of drill into the price chart here. Let's just remove one of these lines so it's a bit easier to see. And here what we can see here is that this prior all-time high coming in at 542.55 showed an indicator reading that was higher than the most recent all-time high. And this is not really how things should be because 544.23 is obviously a larger number than 542.55. So essentially, this is not the direction that the indicator reading should be heading. And what this means is that there is a current bearish divergence that's showing on this chart. And this is very critical from a technical perspective. Divergences in either direction, bullish or bearish, tend to be some of the most powerful trading signals. So what this does suggest here is that share prices could start to move lower, and this will be especially true if we do see negative earnings results from NVIDIA next week. Specifically, NVIDIA will be posting quarterly earnings results on Wednesday. This is going to be a major event for the market, not only for the technology space, but for the market as a whole. So when I say this, what I'm really talking about here is the S&P 500, the NASDAQ, the Dow Jones Industrials, even the Russell 2000. All of these stocks are going to be severely impacted by this NVIDIA earnings release next week. This is essentially, the hub of AI at the moment, artificial intelligence. A lot is riding on NVIDIA's ability to beat market expectations, which are quite lofty. It's going to be very difficult for NVIDIA to beat those expectations. And even if we do see a beat, the market might still not be happy with what it sees. So we do have to be prepared here for some event risk to the downside, because the market as a whole is going to be incredibly vulnerable next week. So specifically, what we're looking at here is a share price movement that is posting a bearish divergence in conjunction with this major earnings risk that will be made public next week. So we've got technical factors and fundamental factors both aligning here. And pointing to a potential share price movement that could face downward momentum here. Specifically, what I would be looking at if I was trading Meta Platforms, Facebook stock, would be first a break of this 20 period exponential moving average. So essentially, this is this rising yellow line here. So if we do see a break below here, the next level to watch to the downside becomes the 23.6% Fibonacci retracement of this major trending move. Currently, this comes in just above 520. So this will also be an important level to watch. And these two areas do come in roughly in contact with one another. I understand there is a little bit of distance here, but you can look at this as sort of a support zone that should offer some buying activity for share prices. However, that does not mean that this will be enough to contain downside selling pressure if we do see a broad sell-off in the market or within the technology sector. So currently, if we do see a break below this 520 level, we really have to start to look all the way down to 505.20. Why do I point to this level? Specifically, I'm pointing to this area because what we're seeing here is another confluence between the exponential moving average cluster and the Fibonacci retracement zones. In other words, what we have here is the 38.2% Fibonacci retracement, which comes in at 505.18. And then in addition to that, we have this rising purple line here, which is the 100 period exponential moving average. And you have to remember, this is a 4-hour price chart. So this is not a short-term moving average that we're talking about here. This is, at the very least, you would have to call this intermediate term. So as things currently stand, a break of this 520 level, I would say very quickly places the focus on 505.20. If we do see a break below there, you're almost certain to lose the $500 handle. And if that is happening, it's probably because NVIDIA posted negative results. I do believe that NVIDIA could hold up the market if these numbers come out strong and if the guidance figures are strong. It's really going to be all about guidance because, there's a good possibility here that NVIDIA does beat earnings. They could even surpass earnings by a fairly wide margin. But if that guidance figure shows any signs of weakness, we're going to see some downside pressure, not only on NVIDIA stock, not only on Meta Platform stock, but on every major technology stock. Because what it would really suggest here is that, the market is really not ready for this AI transition. There's a lot of hype, but, when are the results actually going to unfold? And the market ultimately is going to need to see results. So we need to pay very close attention to these earnings figures that are released next week. Here's the current market update for Meta Platforms Incorporated, stock ticker META. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.